Welcome back to our channel, where we cut through the noise and delve into the real dynamics shaping our financial world. Today, we're taking a deep dive into a metal that many believe is on the cusp of a revolutionary shift: silver. Our guest, Michael Oliver of Momentum Structural Analysis, has some bold predictions that could redefine your understanding of this precious metal. Silver is about to move into a new reality, and honestly, this current selling, especially around the $50 mark, I love it. It tells me the idiots are still out there, those who are short-sighted, only looking at the immediate, short-term, overbought situations. They're missing the larger context entirely. It wouldn't shock me at all when we finally break through that $50 barrier. I'm talking futures now, specifically December futures. They're around $47 something right now. They were just below $50 today. But when we really go through $50, I wouldn't be surprised if we see a situation where we close one day at, say, $49, and the next morning we open $3 higher. A limit-up situation or something similar. This would be pure justice, a force majeure event, a fundamental shift that kicks into gear. This kind of move doesn't give those short sellers a chance to stop out of their positions they put on at $50. You nail them to the wall and see if they can get out. That's why I love seeing the selling at $50. It just confirms that those who don't understand the bigger picture are still in play. In the futures market, we specifically watch the front-month contract. I know that spot silver is currently trading above the front-month contract. It actually hit $51 briefly before dropping back under $50, so it may make new highs. The futures, however, did not. They stopped at about $49.76, just a couple of cents below $50. This indicates that some individuals are betting against it, selling the nearby future just below $50, hoping to make a quick profit. But this is, in my opinion, idiot selling. Our technical assessment indicates that silver is on the verge of a quantum leap into a new reality. This isn't just another bull trend, it's a complete shift out of a price zone it's inhabited for 50 years, essentially bouncing between a $50 high and a $20 low. To illustrate, consider charts for base metals like lead or zinc from the Federal Reserve of St. Louis, easily accessible on Fred. If you look at their monthly closing prices going back to the 1990s, you'll see they also lived within a confined zone for about a decade and a half. Then, in late 2006, these base metals took off, tripling in value. Crucially, they've never retreated to their previous price zones. They now exist in a new reality, averaging double or more their old prices for the last 10 to 15 years. But silver? Silver is still trapped in that initial range, the same one it occupied between its 1979-80 high and its 2011 high. Gold is currently above its 2011 high. Copper is above its 2011 high. And silver is still contained? Give me a break. While we don't focus heavily on day-to-day fundamentals, our technical analysis strongly suggests that silver is about to break out of this range. We're not talking about just another nice leg up. We're talking about a move into a completely new price zone, a new reality. I'm betting we'll see silver well over $100, possibly even between $100 and $200 within the next 5 to 6 months. We're watching for one key trigger: the spread relationship between gold and silver. Everyone typically looks at the gold-silver ratio like 80 to 1, but we analyze it differently. We divide silver's price by gold's price, expressed as a percentage. Right now, silver is approximately 1.2% of the price of gold. This is an extremely low level going back 50 years. Silver has surpassed 2% of gold's price in 21 of the past 50 years, and some of those weren't even bull market years. So we are very much submerged. There's a very clear structure on these spread charts when you plot silver versus gold. We're seeing a pending triple-top breakout at 1.31%. We're not far below that level. When we cross that threshold, we expect a repetition of what happened in 1979 and in the fall of 2010. Just before silver went totally vertical, rocketing from around $20-something to $50 in a mere handful of months, The spread was the absolute tell. We're watching that now, and we believe it's going to break through. Our momentum studies on the spread even suggest a breakout at a slightly lower level than the 1.31%, which was a prior double top. When that spread breaks out, I'm putting on my seatbelt. I believe silver is the place to be for the next 2 quarters. The move could be enormous. Looking back, people will say, "Oh, now I understand why." Supply and demand have been tight. The market has been irrationally suppressed for too long. You see, markets aren't always rational. Sometimes when a market is wildly overvalued, in hindsight, everyone calls it a bubble. But when it's happening, nobody wants to acknowledge it. Conversely, when a market is suppressed for so long, people write it off, thinking, "Oh, that's the new reality. It's a piece of junk. Who cares about silver anymore?" But then, it suddenly wakes up. Markets make mistakes, and investors make mistakes in their allocations and pricing relative to reality. This has happened before. Virtually every other metal in the world has moved beyond its historical base range, but not silver. Why? While silver is a monetary metal and currently moves with gold, once it engages with its own fundamentals, it will develop its own independent life. And I truly believe it's destined for a new reality. If you factor in dollar conversion, $200 for silver isn't irrational whatsoever. In fact, when markets are too irrational in one direction, their correction often leads to an overcorrection in the other direction. Perhaps silver will live in a $100 to $200 range for the next 10 to 20 years, even if it reaches $200 and pulls back to $150. That would still be a new reality. The technicals, particularly the long-term momentum indicators and the spread relationship to gold, strongly support this. To return to its historical normal reality of, say, 2% of gold's price, which it's done in 21 of the last 50 years. In bull markets, the silver-to-gold spread often exceeds 3%. In 1980, it even soared to 6.5% of gold's price. Now let's consider what 2% of a $4,000 gold price would be. And if gold were to replicate its historical pattern of 2 prior 8-fold bull market gains, it could reach $8,500 an ounce. What's 2% of that? My point is clear. We're talking about money degradation here. As Ludwig von Mises famously said, "Government alone has the power to make a valuable commodity like paper worthless." We ran a chart, an M2 chart showing money supply growth going back 25 years to the year 2000. Money growth has increased approximately 4.5-fold. The S&P 500 has matched that growth. In essence, the S&P has simply held its buying power against the dollar since 2000. The price of beef has also matched the growth in the money supply. A pound of frozen beef has appreciated just as much as owning the S&P since the year 2000. But gold has seen a 16-fold increase since 2000. So, as an investor, where is your reality? Gold, 16-fold. Money supply, 4.5. S&P, 4.5. The technicals are screaming that silver's time has come. Fascinating insights from Michael Oliver. The signs, according to his analysis, are pointing to an unprecedented breakout for silver. Will it live up to these ambitious predictions? Only time will tell, but the stage is certainly set for a dramatic shift. Let us know your thoughts in the comments below, and don't forget to like and subscribe for more in-depth market analysis.